All right, good afternoon, good evening, folks. This is Doc and Matt with ReadySetCrypto. Today is Wednesday, the 1st of June. Welcome aboard. Welcome to the new month. And I guess same as it ever was today in today's price action. We can't have more than 2 days of rally. But there you go, right? This is the market that we have right now. Everybody, do us a favor as you check in today. Go ahead and hit the thumbs up button. If you haven't subscribed, please do so. Allowing that allows us to beat the algorithm that's out there. It also lets everybody know that we're on and gets a better crowd for it today. So we want as many people as possible so we can help as many folks as possible out there. So let us know where you're also coming in from today, whether you're coming in from Australia or Latvia or wherever you are today. Let us know where that location is. We always have a great international audience. Again, my name is Doc Severson. We got Mav over here. Welcome aboard. Let us know, check in, and we'll get started here in just a minute. I have never heard of a corporate McMahon. That sounds very Scottish to me. Corporate McMahon. Germany. Good to hear it. Rewind for the epic. You can also play it in double speed if you want, or you can play it in half speed, either, if you want to shake it up a little bit. All right. Oh, we got the Gold Coast coming in from Australia, and we got Jack from Darwin as well, too. So Down Under has checked in. Good morning, lads. Let us know where you're coming in from, folks. Welcome aboard. We'll get started here in just a minute. Mav, what's going on in your world?
Hello, everyone. Just taking it easy as best as possible with the market conditions. I will go ahead and swing into a little bit of what I'm going to talk about today and hopefully get through this pretty quickly, and then we can take your requests for looking at charts. All right. So I'm gonna try my best to not have technical issues today, but we'll see. Anyways, so this is the state of the top 36. I'll expand this to top 50 here over the last week, and we can see it's right across the board for the most part. We have some a couple few standout, I guess, winners, if you can call them that, in this market conditions. Ones such as Cardano or Tron are due to upcoming hard fork / taking over some of Terra Luna's market share with Tron, as they've launched their USDD stablecoin. But for the most part, everybody's feeling the pain right now, right? And it is definitely reflected in the fear and greed index for today, still being extreme fear. We had a very brief little upside push, but it seems like we've fallen back down, and oh no, we're back into the midst of the bear cycle again. And that's kind of what I want to get into today is I kind of want to address that and talk to you a little bit about what projects are going to come out of this on top, and why crypto right now. Like what's the reason to be in crypto? And if nothing else, let's remind ourselves that cryptocurrencies are more secure and efficient than traditional government issued currencies, even if they decide to turn them into central bank digital currencies, CBDCs. It's not going to change that as far as I'm concerned. There's still going to be lots of system bloat and just inefficiencies and everything you know and love about governments reflected in now digital currencies. It's great. So that's why from the start, cryptocurrencies have existed. It's actually interesting that, we are going into possible recessionary territory here. And there's the people out there who say, well, crypto, Bitcoin has never been through a recession before. What will happen? Well, remember that it was a recession that birthed Bitcoin for last time. So, hey, maybe the next Bitcoin, or maybe the next sort of, catalyst or something that's going to push crypto more into the mainstream, more into a place where it's utilized and, call it respected, but like at least recognized as something that is legitimate for what it is. And it comes back to this. It comes back to the fact that we are iterating and evolving upon an existing system that hasn't changed much in the thousands of years that commerce, trade have existed. So what's important about that is even in this day of technological progress and the modern financial and capitalist system around the world, we still have 2 billion people that are quote unquote unbanked, and that's a problem because even in developed countries like ours, you still have people off the grid. You still have people relying on systems that like paycheck cashing systems and things like that, where because they're not able to integrate in the modern financial system because they won't get approved for a bank account because of they're a risk, or they don't live near a brick and mortar bank system, or they don't have a phone or something like that. Many reasons, but what cryptos exist to do is kind of level that playing field in some degree. So it gives you equality of opportunity no matter who you are, where you're from. It's just more egalitarian as a system. And what that does in times like these where we need this sort of energy the most, basically this creates a more inclusive world. This is not meant to be like PC or anything like that. It means like a more efficient economic unit, right? If you have more people being included in the economy, that's better. Economics 101 there. And when everybody has access to a free and fair global system like that, the needs of the many outweighing the needs of the few, great ideas are allowed to flourish. And that's the basis of what I call like a pure capitalist system, is one that values, anyone's contributions because it values them as a contributor to that. And not only is that important today, it's along the trends of what we've seen. If we look back at how fast the internet proliferated throughout the world and continues to do so, crypto is growing twice as fast as the internet. And yes, it's because of the internet that the crypto is allowed to do so. But I think that's the important thing, is that crypto is not the end all be all solution here. It's just another platform of innovation and opportunity. Going back to what I just said here, if this is where we are, when we are in times of adversity, when we're at our lowest like this, that's when we're open to the greatest amount of change. That's when we're open to the greatest ideas and being able to see them flourish, because we're giving those sorts of opportunities, because we're giving the platform that allows those to exist. And, that's what comes tomorrow. And that's the most exciting thing about being part of the space. Let's also talk about some of the reasons why crypto is going to eventually positively see a return to the norm. Not all crypto, I put that caveat out there, but crypto is not dead by any means. And that's because big banks and funds are getting involved. Big money is getting involved. Lots of individuals are pouring money into it right now. You can't tell me that there's few other places that are like, what are you going to do these days? If you need to invest, if you want to save up for retirement, if you need to, get ahead in the system, people are being crushed right now. Good luck buying a house. Good luck, paying off debts. Good luck getting anywhere when now the average rent in the US is $2,000 a month. Good luck getting ahead, but when, like the average median income is $42,000, that math doesn't add up. So that's where we are, is that people need force multipliers like this in order to get ahead. And that's why even during times like these, people are buying the F and dip, because it's giving them a chance at something that they're not going to get out of bonds. They're not going to get out of the vast majority of stocks. It's something that they have to embrace. And that's why crypto is now seen as an alternative investment class. It's something alternative to the established norm that clearly does not represent or respect the needs of the many of people who, again, want to pay off debts, look forward to the future in a positive way. They're becoming more and more antagonistic, more apathetic to a system that's clearly antagonistic to them. And that's why we're going to see more and more integration into the global and financial payment system. It's because people are demanding it more. And that's why you see payment processors like PayPal, Stripe, Square starting to integrate it. That's why we're seeing more and more futures products. We're seeing ETFs be approved. We're seeing retirement accounts be associated with crypto. It's because it's being demanded of that. Going back to the pure capitalistic system, the processes that govern it, if there's demand for something, for like something out there, there has to be a requisite supply of it, right? And that's what the modern financial system is quickly realizing, is that people are demanding crypto. And then you look ahead to like where things are going. Hey, trends like metaverse, you might not like it. I currently don't like it. But in the future metaverse, whatever is deep within Mark Zuckerberg's brain, other than Sweet Baby Ray's and I don't know, binary code, we have the potential of just something new around the block. Maybe it's not what we're currently envisioning the metaverse to look like, because that is not much more than your standard video games or things like that. But as I've made this point before on these streams, you can't tell me this is the limit of our interactive abilities in a digital sense. You can't tell me that Zoom is the pinnacle of digital communication and the way we get work done or communicate. It's going to change. It's going to evolve. And I think metaverse is trying to capture that energy in some respect. And that's why we're also seeing crypto go more mainstream. People are more and more accustomed to talking about this thing. Is not such a fringe element anymore, but something that's here to stay. And I think fewer and fewer people are doubting that ability. And here I have to make a very important point that I don't see repeated enough. It's that when there's a market correction in the crypto markets, people unnecessarily conflate that to like, oh, crypto as a space is dead. And I think that's such a fallacy, because like those two things are different, right? Like just because the price of something has gone down does not mean that the developers are like, oh, well, it sold off 10% today. I better stop working on this project. No, it's in fact the opposite. As we talked about, it's during downturns like these that the true wealth is built, that the real progress in building are done. As I said in my video yesterday, nothing built to last is released in a bull market, right? So only there to be flashy. That was like the epitome of like NFTs and things like that. That is the epitome of a bull market cycle. Whereas in true bear markets like these, we have to think bigger. We have to think big picture. We have to think more about like building the infrastructure and the backbone of things to come. And that's why, to get to today's topic, the projects that are going to last, that are going to do the best, are the ones that are enabling the next iteration of crypto. The real winners of like the NFT phase or like DeFi or whatever are the ones that are providing the systems, the platforms, the infrastructure to make that happen. It's a complicated series of tubes, like, and all the sorts of things that are going on in the background to make that happen. And it's continually be the case that the ones that get through times like these are the ones that are enabling that stuff, that are working on the technologies to make those things faster, more accessible, that sort of stuff. And that is where as we're talking about crypto being mainstream, that's what's helping it get there, is getting it out of version 1.0 or whatever to this brand new sort of liminal space of like, hey, things move faster, they're more secure, they're cheaper, and we're able to do that much more with it. And that's so important in these days. And think about not just from like a software generation, but like those growing up with crypto nowadays. I had a very interesting conversation about someone was listening to a group of kids, and they're talking about like NFTs or crypto. And it's like, yeah, they are much more receptive to the ideals and tenets and what's going on in the crypto space than kind of your established generations who grew up with the opposite. And I think that's going to continue to be. Look just what happened with generations that have grown up with the internet that are native to it. They are just more capable and are able to think in new ways because of the platforms they grew up with, right? So that is just like, that is the next thing coming in the pipeline. So again, as to what's going to survive this bear market, where things are going, I believe it's going to be the platforms that are enabling new trends such as DeFi, NFTs, Web3, and giving real value. I think that's what's going to denote the things that are sticking around. The kind of stuff that's blowing up even this week when everything else is down is the sense of like, hey, this provides value. This is providing true long-term value to the space. So other than that, getting back to when I said it earlier about the difference between the crypto space and the crypto markets, the crypto market is still valuable in its sense of being like this just pure speculation, pure market. You would not have seen a Terra Luna type event happen in the stock market, right? There'd be circuit breakers. They would not let that thing do a negative 99.9% dump in the span of, like a day. Just that doesn't happen. And for better or worse, that limits the ability of markets to do what they want to do. They become more regimented and just it plays by different rules versus the crypto markets, which are 24/7, 365, all across the globe. You could watch it like, hey, Asia's waking up. Oh, Europe's waking up now, and it's leading to new volume and things like that. That is very exciting and not something you're going to get from a localized market like the US equities market that are only trading for a certain amount of hours per day, a certain amount of days per week. So other than that, I would say people are, from a psychology perspective, yes, times like these are hard if you go narrow and you just look at it day by day, hour by hour. But if you zoom out and you say like, yeah, crypto's been through stuff like this before, maybe not to this degree, but certainly, it's been through negative 90, negative 95% drops. Bitcoin has gone through its ups and downs plenty of times over and over again. And so, yeah, maybe it's not a quote unquote store of value like a gold or something like that, but it definitely is an appreciator of value. It's definitely something that over the long term, if you employ strategies like DCA, especially in the downturns like this, you're going to do pretty well. If you zoom out, you take a multi-year approach to it and you're smart about it. But, if you're going to just let the psychology of what's happening today, if you're going to let the color red dictate how you're feeling that day versus the color green, I don't think you're going to have as good a time. So finally, last point to cover here is just this other one that is really relevant this year as we talk a lot about inflation, interest rates, and things like that, is the sense that like crypto is a hedge against that. And yes and no, people go back and forth on that. But certainly if like inflation is really double digits at this point, or whatever the Fed says it is, crypto being able to provide opportunities of returns that exceed that. You're not going to find that in bonds. You're not going to find that in your bank accounts or anything like that. We need an ability to counteract that in some capacity. And so pure speculative markets like crypto, while risky, yes, over time with the right moves and just taking a cautionary approach, going into those, the top cryptos especially, that's where you're going to find a return on investment that is going to let you hedge against inflation, which again is always crushing you from the sense of like, it's always, be it 7, 8, 9%, whatever it is decreasing your purchasing power, limiting your ability to, get returns on your investment over time if you just keep it under your mattress or in a bank account or something like that. So that's what we have to be cognizant against. And I think that's something that it's increasingly relevant today, increasingly relevant as we look for where things are going. As I covered yesterday, our essential strategy is just kind of like looking at what the Fed does. We're not here to fight the Fed. We're just paying attention to what they do so that the moment they go from being hawkish to dovish, that we're right there to hopefully catch the up tick. But as a result, like it can go anywhere as we've seen. And it's definitely not something that's going to play out overnight. This is the course of this year, maybe next, maybe the one after that. We just have to be as vigilant as possible to say, hey, we're coming at this as dispassionately, as emotionless as possible. And, trying to embrace the bear for what it really is, which is an ability for us to really look at what's valuable, make some adjustments as it relates to our strategies, our methods, and just try to remember why crypto exists, why we're in this space to begin with. Not let just a bad day tell us that hey, we shouldn't be doing this anymore. Because again, what other options are there? And that's what I come back to is we are fighting the entire system right now. And crypto's got its faults, but it definitely has a lot of pros too. So that's why we're here. Anyways, Doc, over to you for what's going on from the charting perspective. How are we doing from that? What sort of projects are you seeing that, at least from a chart perspective, I want to say look promising, but aren't making you feel like nauseous?
Oh, there's only one. It's the Mighty
Yeah.
Tron.
Oh, okay. All
The
right.
Mighty
Great.
Tron has gone into a weekly uptrend, but
Nice.
that's about it. Especially in the top 20 or so. I'm
Yeah.
sure there's other ones that are out there that are fairly illiquid, and I really don't want to chase because they tend to get. You guys ever play the game Whack-A-Mole when you were kids? Go to a carnival, things like that. The little moles would pop up, and it was your job to pound on them with this great big mallet. Well, that's what happens to altcoins during bear market rallies. So you'll have occasional altcoins that will pop up and they'll get whack-a-mole down. So I'm wondering when it's going to be Tron's turn for that. So let's go out to the charts, guys. All right. I'm going to start off with my North Star here. This is BTC versus the US dollar. This is a monthly log chart. And what I'm seeing here is that, we've been through this before. The same kind of thing is happening, just a big consolidation pattern. And actually, it's almost necessary for this to reach peak. It's almost like peak futility, right? Where everybody just says, the hell with this, I'm done. And that happened back in March of 2020, just a little over 2 years ago. And then you can see what the result is from that. You want to get, markets have to go lower before they'll go higher. And it's an odd thing because most people don't understand that. So when markets go down like this, and I'm still thinking that we may get somewhere close to 20 grand or so on BTC. So that may be capitulation. We may get a slight undercut from there, but we should see something react off of there, almost as if you touch your hand to a hot stove. So that to me is my thing on, that's the North Star there. If we go down to just the regular daily chart, if we reset this, what we're seeing is we've got, I mentioned this before last week, this is the volume profile. What you have to watch out for is these areas where there's very little volume, and this is where you get the quick moves. And so we were looking yesterday for, okay, is this thing going to rebound just as fast right back up to here? If so, it was going to have difficulty getting above 38,000. We'll reach that at some point. But all this has done is create what's called a throwover. If you think about this being like a clothesline, and if you throw something over a clothesline, this is exactly the sort of look that you get. And this creates a bull trap, unfortunately. So we're right back into the pattern. Now, this is technically a breakout failure right now. This is technically a breakout failure. And a lot of times, depending on how many bulls jump on board here and get stopped out, this could actually be what drives the price down into capitulation. So capitulation is one of those things where, bear markets are just like a forest fire. They have to go, it's part of nature, it goes through from time to time, but it promotes new growth. But it sucks if you're in the middle of that forest fire, right? Ask any fireman. So we're seeing the same kind of pattern just about everywhere. I'm not going to go through the entire top 20, but we're seeing the same kind of thing here with Ethereum as well too. So for now, let's get into the requests that I got from this. We'll start out with Aave versus Tether. And I doubt that we're going to see a whole lot of difference here, but what I like about this is it has a daily uptrend. So this is the very first beginning of what might be a reversal, although to me this looks like a bear flag. This is a standard pattern. And if we go out here to the weekly chart, we're going to see that this is still just in a downtrend. What I want you guys to watch for is this is in a weekly downtrend. I want you to look for a weekly uptrend where it starts making higher highs and higher lows on a weekly chart. So this can continue for quite a long time until this is finished for this. So keep that in mind. Don't jump into these too early unless you have a very, very long time frame or time span on this. Okay, so that's Aave. Let's go back to the daily chart. We'll go through our list here that you guys have provided me so graciously. Well, next we'll go to SNX. So what's going on with this one? Same pattern, same breakout failure back into the pattern. Now, if this is able to build on that into putting in a higher low, higher high, then I'm going to run with that. That's great. But right now, to me, that looks like a breakout failure And if we go out to the weekly chart, we're going to see the same kind of thing. There's no weekly uptrend. Just because you have one candle does not mean you have a weekly uptrend. Here's a hack for those of you that don't want to learn TA or price action. I can understand why. A lot of people don't necessarily trust it, but to me, it's more objective than going based on some arbitrary criteria. You can use what are called Heikin-Ashi candles, which is available through TradingView. I'm sure it's available through just about every value or subscription plan of that. But you can use, just wait for the Heikin-Ashi in the weekly chart to go green. So that'll save you some time and save you a little bit of anguish. And it works amazingly well for a very simple filter. Next one we're going to go over is the mighty Chainlink. Mighty Chainlink. All right, so here's Link USD. And same pattern. Same pattern. Looks like a bear flag to me in the middle of a strong move down. The weekly chart survey says still a downtrend. I would say avoid. And oh, by the way, this is what we're doing on our newsletter now. One of the parts of the Omnia newsletter that I have is a spreadsheet that shows basically, and we're starting off with the top 20, but we're going to include different portfolios that are on there. And we're going to put my stance on there of like what the buy point is and whether this is in an uptrend, downtrend, what to do with that. So watch for that in the future. For those of you in the Omnia service, look for that. If you're not in the Omnia service, what the hell are you doing? Okay, so that is Chainlink. Next one we're going to look at here is GLMR. And this one does not have a whole lot of history to this. So we're not going to get a whole lot of volume profile. Looks like we've looked at this one before in previous sessions. It's just in a big, long, it's basically since it was introduced on Binance, it's been in a pretty wicked downtrend. This one has gone from, roughly 15, 16 or so down to $1. I would say avoid this one until it breaks this descending trend line. Okay, so that's another easy filter for you. That's GLMR. A-Star is our next request here. Okay, same pattern. We had a former uptrend moving into a downtrend, and this is a bear flag in a downtrend. I would avoid this one until it's able to start showing a weekly uptrend. So we can see on the weekly chart, this does not look good. This is not a weekly uptrend. Just one candle does not make an uptrend. So I would avoid for now until this one grows up. Okay, we did BTC. Next one is Cardano versus the US dollar. So Cardano's got a fairly established trend line here, which has been in play for quite some time. So this goes all the way back to August of last year. And until it's able to break out above that descending trend line, that's rule number 3, though, of fractal energy trading, that descending patterns will eventually break to the upside. So when we get final capitulation on this, and we're starting to get some volume, which is good, and it's down to, what, 60 cents now, but it's got a ways to go yet. Ways to go yet, and, until this thing is ready. Let it break that trend line. Let the weekly chart show an uptrend. That's Cardano. Okay, next one we have here is Track. And we'll do Track versus Tether. And this one is starting. It's just barely starting to, let's put a trend line on here. For all the significant highs, it is just starting to show a potential uptrend on the daily chart, but not on the weekly chart. This is why I'm asking you guys to wait for the weekly chart uptrend. So if it breaks above, say, 40 cents, you may have a very aggressive entry there for Track versus Tether. Okay, next one we have is COTI. COTI, and almost the same looking chart. We're seeing the same kind of bear flag looking pattern here with this, so nothing new to add to this coin. Nexo is the next coin we're going to look at. Ooh, and this one really doesn't have much of there's no linearity to this chart. So this is a good example of a chart that does not have any kind of supply and demand dynamics through that we can measure through technical analysis. If I were just to grab Bob Ross and say, Bob, I want you to just paint some random lines on the chart. This is kind of what you get. Well, put a little red down here and a little green up here. And there's no linearity to this. There's no trend whatsoever. This is just a random chart. So Nexo has not gone into any kind of price discovery level at this point. I'm afraid that reference may have gone over just about everybody's head. Okay. All right, here's Decred. Decred, which was one of our channel favorites a while back. That is pretty much what I would say for the trend line on this one. This one is getting trashed. What was the peak on this? $250. Wow, this is tough. Tough to watch Decred go through this distribution process. Right now, this is a bear flag, and it's not ready. It's still under the trend line. Stay away from this one until we get some trend to the upside. Okay, and finally, and I'll look at the chat and see if there's anything else here, but here's IMX. IMX, let's draw a trend line down in this one, and this will keep you safe on this one. So stay out of this one until it's able to trade above, I'd say 125 or so. 125 would be the entry on this one if it's able, but that's a very, very aggressive entry as well too. Okay. I'm going to go check the map here. Okay, so let's see. You got another request for Algorand. And then that'll be it for today. Okay, so here's Algorand. Let's play connect the dots on this. This is a major downtrend that we've had in place since last fall. Okay, so this one is it's down near 40 cents now, Algorand. And little flag pattern. Again, there should be no surprise that this one is in a nasty weekly downtrend. But we're very close to what might be support down here for Algorand. This is going to be in the 20 to 30 cent region down in this area. So mission accomplished. It's gone through a full round trip. And maybe, just maybe, we're going to have final capitulation down here and maybe some buying interest down here at the very low levels. But once again, I repeat to you guys, don't buy until you start to see a weekly uptrend. If you don't know what a weekly uptrend is, just put the Heiken Ashy candles on there and wait till this starts to throw off green candles on the weekly chart. Heiken Ashy. Okay? All right. Back to ReadySetCrypto's Central here, everybody. Any final comments from the Peanut Gallery or from you, Mav, or anything else here?
I think we're continuing to watch the everything bubble play out for one. But yes, I think we're also well positioned for, just stay reasonable. Look at the top 20 as Doc was talking about. In my opinion, look at the platforms of the top 20. You don't have to be exactly right with the way things are going, just so long as you are keeping a bias towards the ones that are selling pickaxes, the miners, if you will. I would be very careful or just stay away from the news cycles as it relates to stuff like Luna, stuff like Do Kwon and his Kwanzi schemes. I would also be very careful about Tron because it looks like it's following in Luna's footsteps. I mean, USDD is a algorithmic stablecoin. It's currently giving out 23%, in terms of payments, and that's great. But as we've seen, it could easily be not great. So be very careful with that kind of stuff. That all said, I think there's going to be opportunities for us to continue to accumulate in this range. This is definitely a time that we want to be careful as we're doing that. Be very reasonable with that accumulation. Not chase things to the bottom, but set our stops as as cautiously as we can, and anticipate that yes, it can go lower. It absolutely can, but at the same time, we are in a space that if we look at it with the right perspective, if we look at this as something that's going to play out, if we look at it, what's going to support the market turning around and us getting back to a place where, like, yes, we can entertain the sort of questions that seem really far off right now of like Bitcoin 100K, like what is the world that supports that? What's the conditions? What's the just state of things that would support Bitcoin being 100,000 or higher than that? And if we just naturally kind of assume things are going to play out in terms of, hey, yeah, things are bad right now, but they can get better too. It is an inverse relationship of, hey, we got to go through times of cloudy times to have times of much nicer times, I suppose. That was poorly worded, but you know what I'm saying. It is definitely during times like these that we just have to stay as reasonable as we can. And yeah, I think we can get through this in a way that everybody wants to write off crypto right now. And if that's the opinion of the majority, let them have that opinion.
It's actually really simple to be successful with this in a bear market. Yep. It doesn't sound like it. And what happens is people think emotionally, right? They think emotionally, they think based on fear. And so they think that listening to news is going to give them an edge. Like, oh, well, I have to know what's going on, or I have to know what's going to be going higher and things like that. And it absolutely provides no value whatsoever. There's zero value in news. All of the news is baked into the price of that particular asset. It's already 100% efficient. Everything that is known about that asset is already in the price today. So why buy something that's heading lower and lower and lower? Don't catch the falling knife. What you need to do is to write down for the assets that you want to accumulate and acquire, write down exactly what price that you will buy into. And don't try to catch the falling knife. Don't, unless you got a super long time frame, of 20, 30 years, something like that, don't buy as the price goes down, because there is an expression that losers average down. I would much rather buy something that's accumulating and rising in price, even though it doesn't seem, it's not popular, it's not what's taught in Wall Street Bets and Reddit and things like that. Everybody wants to pin a medal on somebody that buys as the price goes down. That is a recipe for failure. So it's really simple, guys. Just figure out what you want to buy, write down what price you want to buy in at, and just sit back and wait. The waiting will drive you crazy because we're biased towards action. We want to act, we want to do something, but sometimes the best thing you can do is nothing. Let the price find a bottom and your patience will be rewarded. It's that simple.
And I think the inverse is true too. Make sure that when you do hit that price of buy-in, that you're now defining where you're getting out at, both in terms of to the upside, which is obviously what we hope for, but don't be a bag holder. I don't think nobody's giving out medals for bag holding during bear markets. I think the only medal you're going to get, the only prize you're going to get is regret and, just continued negative losses on that one.
Yeah, if you want to post your loss porn, go onto Reddit and, amaze your friends and family with your losses on their broker statements. But, that's not going to really impress anybody. It's just, it's just more of a community thing. Like, hey, you think that's bad? Check this out. And it's like, wouldn't you rather just make money? Wouldn't you rather, acquire assets that are accumulating in value? That's what I'd rather do. So don't buy into that whole, sense of, well, everybody loses money during this stuff. No, you don't have to. You don't have to. You can set the conditions on how you're going to participate in the market. Do it that way.
Yep. And that's exactly what we're doing at ReadySetCrypto. We're basically just going to simplify things for you. If you're confused or scared or whatever for this bear market, this is your first one. If this is your fifth one, regardless, if you are in the camp of not knowing the future, which if you do, like, please reach out to us. But I'm kidding. If you are just not sure where things are going, and this is scary for you, like, real talk, like, this is a tough time. If you looking at the charts like we're looking at today, not sunshine and roses, right? But that's why we're here for you, for each other. We're going to make this really simple for you. We're going to continue to just talk about, hey, here are the big boys. Here's the large cap cryptos. Here's what they're doing. Here's our preference as to how you should be allocating. What ones are standing out for us, and that's really it. And we're going to watch the market conditions so that by the time it does start to reverse, it starts to go higher. The crypto winter thaws, if you will. That we're well positioned to take advantage of that, rather than bag holding through the bear. Rather than just FOMOing into stuff just because, oh my God, Cardano is up 20% today, and then it's down 25% the next day or something like that. Rather than playing that game, we're going to play the slow and patient game. We're going to come at this from as reasonable a perspective as we can be, because that's the only way you beat the bear. You don't beat the bear with enthusiasm and just euphoria and all that stuff. That's bull market tools. You don't employ them in a bear market unless you really want your whole portfolio to blow up. In that case, good luck. But for the rest of us, I think if our goal is capital preservation, risk averse while being as rational as possible, that's what we're going to employ during this, no matter how long it takes. We were getting ready to employ some of these strategies March of 2020, and we know how that went. But I think we're back to that, if not worse off now. And we're at a point where we have to be very vigilant of the fact that, the free money faucet got turned off. And this stuff, the problems that we're facing are not going to get fixed overnight. That said, we can be well positioned for the things that are going to be opportune in times like these. So all that's to say is you're in the right space. We're here to not bullshit you. We're here to talk to you as it is. No hyperbole. Like, this is the way it's going to be. And you can either, make the best of it, or, continue to believe in delusions. Like, I think the majority of people in the space are going to push. I don't want to do that to you. I would much rather we be honest and open, and, work towards the greater, position to be, just get through this as best as possible so that we can look forward to when things do turn around, and we can be very well positioned as a result. That's why I say, bear markets are when true wealth is built. And if we believe that, coming out of this bear market, that the next big thing is going to be at the forefront of that. That's what we saw with NFTs and DeFi coming out of the brief downturn in March 2020. Hopefully we're right there with the next big thing in crypto. We're thinking of stuff like Web3 and maybe metaverse or something like that, but that's going to take due diligence, and it's going to take watching those trends play out. If we're following that stuff versus just going, deep into let's chase the next, weekly big thing, the flavor of the month, that kind of stuff, you're not going to get through the bear market soundly in that respect. Trust me, I've been through it. That strategy did not work very well from 2018 to 2020. The best way to get through a bear market is just to be as reasonable as possible, stay rational, and things will play out as best as possible. So
I just want to say a couple of words to Gelio. I've been chatting back and forth here, and what you're asking, a lot of people have asked us over the last 4 years. Like, everybody bought into the whole HODL thing. Hey, HODL, diamond hands, that kind of thing. It was it's like a religion, right? So everybody buys into it. Says, well, you got a HODL, and everybody sort of takes the drug and says, yeah, I'm a hodler. And then what would happen is in 2018, as the market sold off by 50, 60, 70%, all of a sudden they're like, hey, Doc, what should I do here? I'm dying here with these coins. And everybody went through the same thing. And I'm like, well, okay, I thought you said you were a hodler. And if you truly are buy and hold, that means that you're completely agnostic in terms of the price. You have to devote yourself to that religion. Just say, look, I'm going to buy every month at the same point, or I'm going to use a technical entry. I'm going to buy on weakness, buy on weakness, buy on weakness. You've got to play the long game with that. If you're truly buy and hold, you must play the long game. And I'm talking about 10 years, 15 years. So you are going to take some pretty nasty drawdowns if you are buy and hold, if you're truly playing the hodl game, which is why I always say to people, depending on your time frame, your timeline, everything like that, defines who you are, whether you're buy and hold, hodler, or whether you can trade. There's nothing wrong with looking for a technical entry and then, just like a farmer, getting a harvest every once in a while, selling into strength and then going into cash. You don't have to, is that going to cost you from getting in at 20,000 and selling out at 100,000? Yeah, it will. But hopefully during that time, you're not going to go through the drawdowns for that. So that's the one thing. You got to figure out what religion that you are, whether you're hodler or whether you're a trader, or what you can do is you can split up your portfolio and say, this amount of capital I'm going to use with strictly hodl. That's all I'm going to do with this. And this part of my capital I'm going to use with specific trading techniques. That to me is probably the best way to go, because then you can do compare and contrast. You can do a bake-off and see which one works for you the best. So hopefully that makes sense. And maybe there's a lot of people out there with the same question. So thank you very much for asking that question. And we're running kind of long. So Mav, should we wrap it up here?
Yep. I think to summate, you have to ask the question, because markets exist to do this. You're only making money if someone else is losing money. So ask yourself the question, especially if you're bag holding on, a very heavy bag, are you, if it plays out one way or another, but regardless, are you losing money because someone else is taking it from you, or are you taking money from somebody else? Now, if you're getting in and you're just bag holding to the bottom, you're probably having your money taken from you. But if you're in something before it takes off, then you're going to be taking the money of the people that are getting in after you. But you have to have lots of conviction for that. And yeah, to Doc's point, I think a system is better than just a belief in that regard. So regardless, yeah, stay rational, stay reasonable through this, and we'll get through this together. But that's what we're here to do. ReadySetCrypto is a community that's not about bullshit, not about shilling. It's about as reasonable a take as we can make in the moment. And that's it. So we're going to help you get through this no matter where things go. And, because we've been through this before. And, we care a lot about this community. We care about you. And we appreciate you sticking through this, because I know it's not easy sometimes, days like today where things are down. But you gotta take the bigger picture in mind. You got to take the longer term approach in mind, and you'll get through this. We'll get through this together. So hope you're doing well out there. And as always, thank you so much for hanging out with us. We'll see where things go, and we'll do the best we can to react to them. But until then, take care out there. Doc, you got anything else?
No, I think we've exhausted the the stream today.
Yeah. Cool. Well, until the next one, guys. Cheers. Take care out there. Bye.
All right. See you, everybody. Bye now.